Hello and welcome to Forex.Academy, your number one website for Forex and crypto education and analysis. In today's edition, we will be discussing the Dow Jones Index bull trap. A bull trap is a misleading signal which tells financial traders that an asset, which has recently fallen, has reversed and is currently heading upwards, when in fact the asset will continue to decline. When this happens, it traps buyers who went long, often at the top of the rebound, only to go on and suffer losses when the asset crashes. We may well find ourselves in such a situation with the Dow Jones Index currently. This is a daily chart of the Dow Jones Index, and we can see that after a record-breaking run during February 2020, when the American economy was flying high, it crashed to a low of 18.200 just a few weeks later after the outbreak of COVID-19 and the US shut down its economy to protect the citizens. This is the first time their economy has been closed down by government consent. The Federal Reserve threw money at the economy in the form of reducing interest rates and massive rounds of financial relief packages worth over $3 trillion so far. And yet still, with the majority of the economy flatlining, the Dow Jones Index rallied to a recent high of 24.900. This was effectively a massive bull run during a slump. It caught a lot of investors off guard. Many who were selling stocks and shares seem to have sold out too soon during the first crash down to 18.200. But will those investors who started buying in again after that low now suffer as the index falls lower, or will we continue to see a momentum to the upside? The issue for investors as the Dow Jones sits at the 23.650 level is that the banks are not paying dividends to investors this year as they try to shore up losses caused by the pandemic. This makes bank stock highly unattractive to traditional investors who would have previously bought the stocks while accepting the risk of a potential fall in stock value, all the while receiving dividend payments. They were happy to ride out any financial storms while waiting for the better times ahead after the economy recovers, and thus a return in share price. However, this crisis is not the same as the financial crisis in 2008, where investors such as Warren Buffett piled in through his investment vehicle, Berkshire Hathaway, to pick up stock cheaply, looking for a long-term growth. He did extremely well when the economy went on to surge higher. However, Berkshire Hathaway has suffered heavy losses in this current crash, having lost an estimated $50 billion, and Mr. Buffett claims to have made a mistake in buying airline stocks and just sold 84% of his stock in Goldman Sachs. This is the darling of the Wall Street investment banks. Could the writing be on the wall for the US stock now? He said that while the trains had come off the tracks in 2008, they are currently in the sidings in this event. So with over 20 million currency unemployed, GDP at minus 4.8% for March, government debt growing, and with 1.5 million cases of COVID-19 and almost 90,000 poor souls having lost their lives, what on earth seems so attractive about buying US stocks right now? The simple truth is that there are more buyers than sellers right now. Many investors believe that the economy will bounce back quickly after similar health crises, such as Ebola, SARS, bird flu, and Zika, where there were crashes in stocks but where they quickly recovered. Also, where firms and executives of those firms have bought their own stock at the dip lower, some economists believe there will be a V-shaped recovery, a quick fall and a quick recovery. This sort of talk causes FOMO, or fear of missing out, a very big reason we see such rallies, as people pile in buying stock believing that the worst is over. This is the number one reason that stocks are getting bought while the news is getting worse. But the elephant in the room is COVID-19. It's still an unknown disease at the moment, and the second the markets hear of a second wave, they will drop stocks like hot potatoes. There will come a time very shortly which will be the straw that broke the camel's back, bringing the current bull run crashing to an end, and that will confirm what we see as a bull trap. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.